Hey folks, welcome back to this edition of Ben's Bits. Last week we discussed the boomerang effect, or the boomerang generation, within the context of that bit. And if you missed it, you really should give it a watch because it's very relevant in light of the market right now. And the bullet point of that bit was to highlight the effect that young adults had in moving back in with their parents, and the effect of them moving back was having on their retirement account, because parents are having to postpone retirement and have to work longer or get bigger houses because their kids are moving back in, or even take money out of their accounts to help pay for things because of the added economical burden, all because their kids were moving back in with them due to the economy. But this week we have something that's really important and needs to be heard by the majority of people in this nation, especially investors, because it's a really big deal for those of you who have IRAs. This isn't a political message. This is something you need to be aware of, and it's really important. So I'm sure by now most of you have heard about the current infrastructure bill that's being debated in in both houses of Congress. You know, that $3.5 trillion deal, right? The reconciliation bill. Right now, it's in the debating phase, but the issue that people aren't talking about is that reconciliation requires you to increase taxes to match the spending increases, at least according to DC math. Here's the thing. In order for that tax increase, there needs to be a lot of tax loopholes that need to be closed or adjusted. And well, Ben, that doesn't sound like a bad thing. Well, 4 of those apply directly to your IRA. First, they want to cap the account balances at 10 million. Essentially, they want to put rules in place where you must distribute funds out of the IRA once you hit that balance. And second, they want to eliminate conversions from traditional to Roths, which is a very big deal for tax saving purposes. And they want to do this so that they can collect more taxes later. And this is a clear indicator that there are those in DC who are not a fan of Roths. I mean, it's just reality. Number 3, they want to prohibit IRAs from investing in funds or syndications or any other investment that requires you to be an accredited investor. And that would basically eliminate a lot of investment choices for larger IRA accounts. And if it passes, all 506 types of accounts, that's all accredited investors' investments, must be unwound or distributed by the end of December 2023. So you have 2 years to liquidate that. And this would create liquidity issues that would crash values in the real estate sector, which we'll discuss further next week, and we'll expand a little bit more on why that's important. And lastly, it would restrict the account holders' ability to invest in their own IRAs in any type of entity, like LLCs, trusts, joint ventures, partnerships, and the like. If you own more than 10% of that entity, basically you can say goodbye to checkbook-controlled IRAs. You know, if this is important to you, and it should, you really need to contact your member of Congress and ask them to have sections 138312 and 138314 removed from the reconciliation bill. If it isn't important to you, then it should be, because this also affects generations to come, which we'll talk about again next week. So that's it for this edition of Ben's Bits, and as always, thanks for watching, and we'll see you next time.